The first thing to consider from an investment point of view is what is the scale, the size of the market, and therefore the investment opportunity that we're talking about. If I focus on the infrastructure component of communications, the average consensus forecast that we've seen from analysts is that the next 5 years requires a communications infrastructure investment in the region of $70 billion. So on the one hand, you've got people concerned about saturation and where's this market going, where's the growth coming from. On the other hand, you've got an absolutely enormous need, $70 billion to be funded over the next 5 years. So the question is, if we're approaching saturation, bring up the point about undersea fiber, and is there too much capacity? Why is there a need for this large amount of dollars? And I think in that case, it's important to contextualize the African mobile story. On the surface, it's been a huge success story. Reaching 500 million voice subscribers has been, I think, rightfully credited as one of the drivers that's put Africa very much on the radar for the rest of the world in terms of the scale of the opportunity and the size of the market. But at the same time, that takes us to 50% penetration, which by global averages, even other emerging market averages, is still very low. So there's a lot of work to do there. Certainly acknowledge challenges in reaching the next raft of subscribers, but there is still growth for the coming years there. I think the second point is the infrastructure that supports this 50% penetration, according to many reports, is often of inferior quality and on a pricing basis not competitive with benchmarks that we see across the world. So there's a lot of work to do there. But I think bigger than all of this, as discussed before, is that's the voice story, and broadband's really the game changer for Africa. Even on a generous definition of broadband, penetration is somewhere between 5 and 10% of the continent. So the amount of infrastructure that's required to facilitate broadband access for the billion or so people in the continent is absolutely huge. And all of these figures, in my opinion, take into account the need for infrastructure that will get Africa to a comparable level with where the rest of the world is today. But in the time that investment's going in, obviously the world will progress, and things like social media, user-generated content, cloud-based services, video streaming and the like, is just increasingly driving the need for more and more, for thicker pipes and more broadband. So in our view, the absolute quantum of investment required is enormous. The question is, who's going to provide that investment? You know, we come from the past decade or two where operators, particularly mobile operators, had access to enormous amounts of cash flow, hugely profitable, very fast growing, and at the same time, infrastructure and coverage was a strategic advantage or competitive differentiator for them whilst this race to get to 500 million subscribers was on. Things have changed, and they're changing very rapidly. I think operators are under much more pressure than they've been in the past because of deregulation. Competition is fierce. There's a lot of regulatory pressures, environmental pressures. There's increasing technological complexity, and all of these are combining together with the fact that in many regions, many operators have got the same level of coverage. So owning and investing in your own infrastructure is no longer A, required, or B, not necessarily wise. So that's really driving the shift towards infrastructure sharing that we're seeing, and the entry of private sector investors in the likes of the cables, the towers that Mamadou's brought up. And really that's what provides the private sector investment opportunity, is to invest in the infrastructure that becomes the backbone for all of these players in this converged environment that Paris has described. So regardless of your offering, you are going to use basically one pipe to be able to provide your services. So investing in that base level of infrastructure that it enables the operators and service providers to actually focus on their core business, which is attracting and retaining clients and selling them higher margin services. That is where they will compete and actually allow the infrastructure to be owned, managed and run by independent parties. So I think none of that is particularly unique insight to Convergence partners. It's a very well acknowledged need. I guess the question and where the opportunity lies is, how does one make these projects sustainable and bankable? And many projects that have been identified have been in the pipeline for a very long time, have failed on that basis in terms of the inability to secure financing. And in that, I think there's a lot of models that are developing, still way too slowly in terms of addressing the need, but there are models that certainly we've been successful in that has enabled projects to be bankable. CECOM is one example, the New Dawn Satellite joint venture is another example. So the models are developing, and that's really the space that we're looking to play in.
Doing business in Africa, you can't afford to be without Africa Investor.